Hello everybody and welcome back to the channel. Today we're going to be taking a look at Microsoft stock and see if it will be a good investment to add to our portfolios. As always in the beginning of the video, if you have not heard of Microsoft, pretty much they owe all the brands that just popped up here, which is Word, they have Excel, I don't even know what this is. I think it's PowerPoint, Outlook. So a whole bunch of different brands that we use on our day-to-day basis to do our jobs. For example, myself, I am in sales, so I use Excel for data. I use Outlook to email. I use Microsoft Teams. I use Word for documents that I need customers to sign, so on and so forth. They also own the famous game console Xbox. They own the rights to Minecraft, which is a huge game. As you can see here, Minecraft, Assassin's Creed, Sea of Thieves. Definitely a company that innovates and knows what the public of their customers want. That's why they've been performing so good and throughout their history. Apart, they're one of the biggest software companies in the world. If we take a look at the current stock price, it is down 7% year to date, which that is about $29. Yes, once you see the stock price, it's kind of scary as a beginning investor. You usually want to buy stocks that are cheap because you think that will be the best bet, but that's not necessarily the case. Microsoft is a company that is worth 2.89 trillion. It has a PE ratio of 31.30%, which is a little bit high, yes, and it has a dividend yield of 0.85%, which is a little bit low, but keep in mind this is a growth company, not a dividend paying company, even though their dividend has been extremely safe and growing, and we'll get to that in a second. Now, taking a look at the 52-week low compared to the 52-week high, we are closer to the 52-week low than the 52-week high. So this is one of the main reasons I'm trying to invest in this company, apart from the fact that the overall market is crashing. Now, if you take a look at the max history of the chart, you can see Microsoft is a steady and growing company. This was in 2022, and now it hit all-time highs of about 468, and now it's dropping, which is why I'm trying to invest in the company before it keeps going back up. Let's take a look what analysts are saying about this company. Wall Street analysts are expecting this stock to be a buy, actually a strong buy, with 39 strong buys, 13 buys, only 5 holds, and no sells or strong sells. This is not the intrinsic value we're going to be taking a look at, but they are expecting a price target of a high of 650, an average of 507, and a low of 420, which that means we are already below the low that they expected. If we take a look at the earnings, you can see that this company beats their earning every single time. They're a very healthy and well-managed company. This is a good thing, especially in a giant like Microsoft, Google, Nvidia, Apple, and so forth. You gotta make sure they have a good management team. And I also have some formulas that I'm gonna show you in this video that Warren Buffett uses to determine if the management team is good or not. Now, if you watched the channel before, you know that the annual EPS is very important to me. They're expecting in 2025 to be at 13.18, and in June 2026, which is a year afterwards, to be 15. This is increasing. Check mark there. This is very good. We take a look at the annual revenue, guys. We just saw this company is a $1 trillion company, and they are increasing their revenue from 277 to 315, which is about a 30 billion increase in revenue. This is crazy for such a huge company. Now, since we were talking about the dividend, let's take a key look at it. You can see they've been growing their dividend steady for over 20 years. That means in market crashes, they have not cut their dividend. Their 5-year growth rate for their dividend is about 10%. That means you're going to be getting a 10% increase every single year. On average, doesn't mean it's going to be every single year. And their payout ratio is 25%. Usually when you invest in a company just for dividends, you want the payout ratio to be below 70%. This one is at 25, which I think is great. And of course, the dividend yield, as we saw before, is 0.85%, which that equals to an annual payout of $3.32 per share. Keep in mind, this will be growing for 5 years at an average of 10.25%. Now, I myself like to invest in ETFs because I don't consider myself smart enough to be investing in individual companies, with an exception of a few that it's kind of a little bit obvious to invest in. But if we compare the Microsoft stock to the S&P 500 chart for the past 5 years, you would have made a total return of 127% on Microsoft and a total return of 84% of the S&P 500, about a 40% or 50% difference. So let's go ahead and take a look at the metrics, the discounted cash flow value, and the intrinsic value to see if Microsoft would be a good investment. Now, these are some of the rules that Warren Buffett uses to determine whether he should invest in a company or not. Keep in mind, there's a lot more. These are just some of the ones that I've seen from him while speaking at his conferences, right? So you can see, kind of a spoiler here, all the numbers I already have it here, but let's take a look into it, right? He wants a gross margin of over 40%. When you do the calculation, dividing gross margin by the revenue, you get a gross margin of 69%, which is a check there. Selling, general, and administrative margin, this already comes into that play of the management team or how good they're doing. He wants it under 30%. It's currently at 18%. Research and development, again, how much is this company investing and doing research to make their profit? He wants it to be under 30%. Microsoft has it at 17%. Interest, expense, and income under 15. Microsoft has it at 2. This one is a very important one. Is income tax expense and pre-tax income. It should be around 20%, which is around how much tax a company should be paying. Again, this comes back to the management team, how well they're doing paying their taxes, not doing anything sneaky that can hurt the company in the future. This is currently at 18.23%. Profit margin over 20%. Microsoft has a crazy profit margin of 35.9%, and he wants the earnings per share of the company to be increasing. As we just saw in the previous slide, the earnings per share was going to increase from June 2025 to June 2026, and the past 5-year average of their EPS earnings is about 18%. If we take a look at Microsoft discounted cash flow analysis model, pretty much I've gotten their income from 2015 to 2024. It is an average growth rate of 14.84%. Obviously, we want to be conservative, so we're only going to take a growth rate of 10%. And after you put its cash and equivalent compared to its total debts and its shares outstanding, you can see that Microsoft should be worth about $302.50 just based on the discounted cash flow analysis, which is a little bit lower than what the stock is currently worth. So this means that you can either wait for the stock if you think this is the model you want to follow, or this just gives you an idea of how well the company is doing. That's up to you to decide. So let's go ahead and take a look at the intrinsic value. To take a look at the intrinsic value, we first have to put the stock ticker, which is, and then we got to find the growth rate projection for Microsoft. For that, we simply go to Google and we put Microsoft future growth rate. Now, so we can see their future growth rate is about 12.5%. Now, as you can see, based on the formulas, there's only a buy in the original Graham formula, which the stock should be worth about $415. However, I don't like to invest just based on intrinsic value. I like to have a margin of safety, which is this down here. And with a margin of safety of 35%, you should be buying this stock at around $240. Now, guys, keep in mind, this is just an average to use as a rule for every company. Doesn't necessarily mean that this will apply to every company, because every company is different. Every company has a different mode and a different business model. But the overall of the market, this is a good formula to keep a track of. So let me know what you want to do in the comments below. Do you want to wait for Microsoft to be around $240 or the $302 based on the discounted cash flow? Do you think it's a good price? What are you doing? How are you preparing for the future? I would love to hear your comments. Please let me know below. And as always, if you enjoyed the video, please consider leaving a like and don't forget to subscribe.